Let's get in a pharma analyst. Abhishek Singhal, Associate Director at Macquarie Capital Securities, now joins us on a phone line from Mumbai. Abhishek, good morning. What's the view as far as Lupin is concerned? Do you think the July 15 clearance that they have got is just a step in the positive direction and March is an important one?
See, Lupin, as far as Lupin is concerned, they had two inspections, one in July 15 with 9 observations, which was largely around the equipment and warehouse management, and the March inspection, which was largely around in adherence to the standard operating procedures and lack of it. Now, put together, there were around 18 observations outstanding. The fact that the July 15 inspection is now all clear is definitely a better situation to be in than the entire 18 observations outstanding. But as far as product approvals or complete overhang of the FDA issues is concerned to be behind us, I think it will be too early to kind of come to that conclusion. That said, it's definitely a very positive news that FDA is now satisfied with the remediation efforts as far as observations were concerned regarding the July 15 observations.
Right. Can you just tell us that both the observations, as you were saying, 9 and 9 observation, there were 3-4 observations which were similar to July 15?
So there weren't many repeat observations. The fact that the FDA is now satisfied with the July 15 would essentially mean that whatever they had raised issues per se in that inspection, they would have now been satisfied with the efforts that Lupin has put through. So I think there is very hard to kind of draw a link between the two observations right now. It would be very unlikely for FDA to give a complete clean chit had there been repeat observations in between the two inspections.
Right. Can you just tell us that, for a company like Lupin, of course, for a smaller plant, they had got an EIR just a while back. Before we've had some issues with Lupin's plant, but they've again gone ahead and cleared it. It's not something which all the pharma companies in India here has done. So timely clearance, within a year, they've got an EIR for their Form 483. That itself deserves a higher multiple?
See, as far as timelines of clearance is concerned, depends upon the issues raised. Okay, so the fact that the issues that were highlighted in the Form 483 did not materialize till date into a bigger regulatory action itself is a point of credit. Now, I think to link the faster approval timeline with some of the other guys might not be the right yardsticks, because the issues involved possibly with some of the other large cap names were far more graver, and possibly that's the reason why they did see it converting into a warning letter as well. I think as Lupin stands today, the consensus on our estimate of EPS for FY17 is around 67 rupees, and the stock pretty much would be around 25 times that number. So to say, so as far as the current trading is concerned, it itself is trading at a premium to the sector overall at this point of time.
Right. Abhishek, can you just also tell us that for Lupin, after July 15, the observation letter, the first one which they've got cleared now, we did see some approvals coming in. But after March 16, the approvals stopped. So you would only expect approvals to come in at the start of FY18 once we have clearance on the March observation letter?
Pankaj, that's what our base assumptions are right now. We have an outperform rating on Lupin with an 1800 rupees target price. Our underlying assumptions, we haven't seen any approvals come through from March 16. So if you look at our underlying assumption is that they will be able to resolve these issues by sometime calendar year end this year, and possibly incremental approvals start trickling in from that facility. They have around 30 pending from there, starting FY18. But that said, this is one of their facilities. They do have approvals trickling in from other facilities, as well as the Gavis acquisition that they have done. So, it's a good quality stock to own from a longer term perspective, 1 to 3 year view. But how does the stock behave in the next 3 to 6 months, given the news flows around that? My strategy would possibly be to add on to this stock on declines, rather than being very aggressive, at the elevated levels.
So, Mr. Singhal, could you just explain to us how would you differentiate in terms of valuation of let's say the top 4 pharma companies by market cap and then some of the smaller companies? Because if I look at them, then if I look at the consensus valuation in terms of PE multiples for FY18, then almost everyone's trading at about 20 to 21 range. And within that, Cipla is probably slightly less at about 19 and a half, just marginally. And then come the Aurobindo Pharmas and all, which are at about 15 times. So how should a viewer or an investor compare these valuations, and what is the growth prospect of these companies?
See, if you look at the sector at this point of time, on an FY18 numbers, yes, the large cap names would be close to around 20-time multiple. Our sense is that the ones who can make the specialty transition as we go forward and possibly are able to keep themselves away from the regulatory issues are the ones who could head to a higher multiple, possibly 25 times or so. So for the larger cap names, possibly like Sun Pharma, Lupin, these are the names which can possibly, as incremental approvals from US start flowing in, could potentially trade at a premium of around 20 times multiple as we move forward. Now, specifically, as far as Aurobindo is concerned, we do not cover that stock, so it's very hard for me to comment on that name. But my sense is the leaders on board incrementally could transition to a higher multiple if they can convince the market of their specialty transition, which increasingly means that you are able to invest higher on R&D and reap benefits for that as you move forward.
So as of now, when the market, big cap companies, and I'm trying to look at the biggest would be in the, all are within that 80,000, 70 to 80,000, that is Lupin and Sun Pharma, and then come the lower down the order, the DRLs and the Ciplas, which are within that 40, 60,000 kind of crore. Now, my question to you is that, is the market now considering that these are not really major growth stocks anymore? The sector is not really going to deliver that kind of massive growth, and now we are almost in the valuation multiple range.
I would shy away from making that conclusion that the Indian pharma is not a growth sector anymore. If you look at the overall revenue mix, 50%, 45% of revenue comes from the EM markets and around 45 to 50% from developed markets. And in each of these two categories, if you look at the share currently, if 70 to 80% of EM is India and almost like 80% of DM, that's developed markets, is US. So if you get the India and US story right, you've pretty much got the entire sector right. Now, looking at the US, the people talk about the patent cliff, but one thing that people tend to forget is that if you look at the value share of the Indian players today, is still at low teens versus the volume share way above the 30-35% mark. And if you look at the filing share of the Indian players today, we will be close to around 45-50%. So essentially what it means is there's a big discrepancy between what the value share in the US generic market Indian players have versus where your volume or the prescription share or possibly your filing share lies. Now, this disconnect will get corrected as you start making more dollars per incremental prescriptions, which means that you move or transition yourself up to the higher complex and more difficult to make category. And I think the larger players today are pretty much investing towards that. You look at the R&D spend on an absolute level for possibly Lupin or even Sun Pharma. Lupin will be close to around $350 million of annual R&D spend. Say 5 years, 7 years back, their R&D budget would not even be $50-75 million. So the ability to incrementally invest higher amounts into R&D is definitely going up. And I firmly believe that this transition, some of the larger players in India will be able to make that transition. And if they do, the growth would come, and hence the multiples are unlikely to correct. So, but this is a view that you have to take.
So my question to you is that would the multiples go from, like as we discussed, that 1 year forward, or let's say 1.5 year forward, multiples, FY18 multiples are around 20, right? Would that go up? Would that possibly move to the 25 range if what you said happens?
You see, I would say that a couple of guys who are able to make that transition, where you see some, either NCE or NDDS kind of products getting approved or clarity around that getting improved, it is possible for the multiples to revert back to the 23, 25 times. But of course, for that to happen, more clarity and visibility on the pipeline should emerge. And of course, secondly, the regulatory overhang, which has really bogged down the sector of late, should abate. So, see, there could be a lot of, so there might not be a big multiple delta on your returns perspective, but definitely growth should translate into the stock price return.
All right. Mr. Singhal, thank you so much. Would you like to make any disclosures before we let you go?
So I think my company's already offered
Yes,
this.
we have shown that. If there's anything specific you would like to say.
No, we don't anything out here.
All right. Thank you so much.